Good afternoon, everybody. This is Brian Dewhurst with Uncommon Wealth Partners, giving you your April market update with your Bitcoin briefing. Let's get into it. What a big month. Taxes were due. S&P 500 down just shy of 1% year to date. NASDAQ up 2.35 still. Dow Jones closes down 2.24 for the first 4 months. Gold only up 0.74. And Bitcoin rallied back quite a bit. Still looks down a lot, but it was down about over 50% at one point this year to date. So it's rallied back quite a bit in the last 2 weeks. So to the charts we go. This is the S&P 500, our normal view on the monthly. Again, we're looking for these red candles where we're seeing multi-month volatility and the trend potentially, being impacted in a shorter term. That's what we're looking for. We still don't have a red candle on the chart, so we are very close, though, I will say that. And that's what we're looking for. So, again, our second red dot down here, breaking our pattern of a streak of green, 6 dots there. And we're continuing to wane here in the momentum or our squeeze indicators. So, definitely, we're just looking for that data to confirm that the sentiment has shifted, but we have not received it yet. So we ended the quarter again, and a green candle's up here. So that trend is still intact above the 21-day moving average. And you can see the 21-day moving average right here. And again, we haven't seen the breakdown in trend. And then on this one, again, price is kind of cutting through some of the shorter term moving averages. That's happened before, and we've stayed on trend. So we like this as a confirmation indicator. Again, we still have our moat of safety, if you will, between these two series of lines. And we haven't seen the trend break down. So gold's kind of gotten hit. I'm going to get into this today. The dollar has rallied, and dollar and gold are trading totally inverse of each other right now. So our chart still looks bullish on gold. 4 green dots down here, blue candles above the white line. The 8-day moving average is above the 21-day moving average, which is bullish. And we're still on teal increasing bars down here. So everything still looks bullish on gold. But in the extreme short term, in the last 2 to 3 weeks, the U.S. dollar has turned higher. So we're seeing a rally in the dollar, and I wanted to show you that. This is a long-term chart on the dollar. This is actually a 20-year chart going back. You can kind of see to 1998. But I wanted to key you in here on where the 50-day cuts through the 200-day moving average, and you see price rally, fall down, rally, fall down, rally, fall down, rally, fall down. That was over multiple years. What we have here is the 50-day just crossed the 200-day moving average. We see it, price falling down, rally, price fell down, rally, up to that line, just like we saw it the last time, and then it falls down. So I think we're in a short-term trend here where gold is getting impacted by the strength of the U.S. dollar and the markets in general, actually, too. So the dollar is volatile, and in that, we're also seeing the yield curve flatten out. So the yield curve is basically the longer term you go out. So let's say you have a 3-month note, a treasury note. Well, that yield is very low right now, less than 1%. And then if you should have like a 10-year treasury, well, we've seen those yields closer to 3%. Well, in the last several weeks, we've seen the spread between the 3-month and the 10-year starting to flatten out, as you can kind of see here. The yield is approaching 1 to 0. And when we've seen that happen in the past, as it comes down, these gray bars represent recessions in the economy. And so we saw the yield curve flatten out towards 0, recession, flatten out to 0 or below, recession, recession there again, flatten out over a multi-year time period, small recession, and then flatten out over a multi-year time frame, small recession. That one actually wasn't so small. That was, the tech wreck. And then yield curve flattened out again towards 0, and we had the financial crisis. And now we're seeing the yield curve, and it's been 10 years. So we're seeing that. So that we're watching that. And so that can also play into the impact of the stock market and our charts there. So all this stuff works together, and we're monitoring this for you to see if we need to do anything. And with that said, if you're uncertain about your job, or you want to retire, or you want to quit your job to start a business, and you don't want to lose money in your investments, and your time horizon has changed from the long term, 5+ years out, to where you're saying, hey, I might need that money. I want to go start a business, or I want to retire. I don't want to take another leg down. Well, then you need to talk to your financial advisor, because I think there's definitely going to be some potential headwinds this summer, the way this data is shaping up. So we want to make sure that things haven't changed in your life that would adjust your risk tolerance with what's happening in the market. So with that, Bitcoin, this is a daily chart. So we've been looking at monthly charts and longer term charts. Again, the futures contract on Bitcoin hasn't been out that long, so I'm on a daily. But you could kind of see here, we got a green arrow, green arrow, green arrow. So we got 3 in a row, and as the price consolidated downwards and sideways, and then it went blue, candle above the white line. We have the blue candles above the 8-day moving average, is above the 21-day moving average. And our green dots went all green, and our teal bars are going increasing. So we saw that rise in Bitcoin the last 2 weeks, and it's looking good. I think Bitcoin's going to pull back because it's up quite a bit. It went basically from 64.85 to 9,300. So, I mean, that's a 50% move. So I would expect it to retrace some of that move, pull back, because that's just a lot. And so, but yeah, it's been a nice move for Bitcoin here in the last 2 weeks. And in the news, this was big. To me, it was big. I hope it is big to you. And I know we talk a lot, Philip and I talk a lot in our podcast about the 7 sources of residual income. And I don't have this one up there, but I wanted to talk about it. Amazon announced, they've never announced how many subscribers they actually have for Amazon Prime, which I'm sure many of you have. They announced they have 100 million subscribers to Amazon Prime, which is a subscription model, which is the 5th source of residual income on our 7 sources. And so Amazon's a big player. Obviously, they announced earnings the other day, and it was big, and the stock was up. But Amazon came out and announced Web Services launches blockchain templates. And basically what they're saying is they're going to be using Ethereum and the Linux Foundation's Hyperledger fabric to allow preset blockchain frameworks that support contracts, smart contracts on the blockchain. So Amazon has purchased different domain names in relation to cryptocurrency and blockchain. They've also filed patents to mine blockchain data. And now they're opening their Amazon Web Services platform for blockchain templates. So one of the largest companies in the world, and most profitable, I would add, is making a triple front effort to get into blockchain and cryptocurrency. And so I think that is further proof that this cryptocurrency blockchain trend has legs, and we should continue to pay attention. So with that said, that's all I had for you guys today. I hope you enjoyed this. Again, if you feel like your time horizon or risk matrix has changed because of things going on in your life, and you need to reevaluate your risk tolerance with your financial advisor, I'd highly recommend doing that. It's, taxes are done. You got all your numbers. Now would be a great time to review things with your advisor or us. We always want to meet with our clients. So if you feel like there's things changing in your life, we definitely want to know about it. We'd love to help shape how this information is applicable to you. Thanks, everybody. Take care. Bye. The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.